The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.
Ramesh Fakori here, your host at the IRA Club. Very excited to talk about a topic that I think it just gets overshadowed, especially in our industry. Again, for those of you joining for the first time, Ramesh Fakori, Vice President of the IRA Club. We are talking about due diligence, how to decode it, and put together a solid framework before you jump into any alternative investment. Co-hosting me with me today is a good and dear friend. We've known each other for going on close to, Chris, correct me if I'm wrong, 7 years?
Almost, yeah.
7 years, been working with the IRA Club. And for those, again, that are joining for the first time, IRA Club is a self-directed IRA company where we allow our clients to diversify a portion of their retirement accounts into alternatives. The one challenge that, Chris, you know this firsthand, is as a self-directed IRA company, we cannot choose the investment for the investor. The only piece of advice is stick to what you know and understand, which kind of goes into this topic that we're about to break down, which is due diligence, right? This is more of an advanced strategy for a lot of people because I hate to say this, Chris, you know this firsthand. When we go to events, I'm talking about you and me in particular, people get so excited when they learn that they could use their retirement dollars to invest in a private equity deal, real estate, land syndications. I will tell you here at the IRA Club, 60, 70% of our clients are investing in a private equity deal or a syndication, oil and gas deals. And one of the things that it just baffles me, Chris, is why are our clients or some clients or clients that we meet at events not doing due diligence? And that's where you come in, Chris. So I want just bird's eye view. I know there's a lot to dive into. And I know you're such an expert on this. And I actually lean to you every once in a while when there's something that I don't understand in this space. I give you a call and you break it down. But, give us a little breakdown. Who is Chris Carsley?
I've worked in a variety of different investment fields for the last 30 years, covering financial advice for individual clients, hedge fund trading, venture, managed futures. And then I think what we're going to talk a lot about today is some of the work that I did for a large allocator in doing due diligence on funds. So my job with a team of others was to run around the globe and tear into a number of different managers and see if they would fit one of the portfolios that we were managing. And it's a daunting task. It can take a lot of time. And I think, to your point, or a lot of people avoid it. I don't have the time to do this.
Yes.
I'm too busy.
Yes.
Or, listen, nobody wants to do something they don't know how to do. They want to get it done. It's not what they want to do. It's either boring or it's a psychological, like, I don't want to look dumb.
Oh, it's what they hear. It's what they hear, right? At the event or the syndicator or the private equity firm, we're going to give you X, Y, and Z. They get so excited. They're hot on their pants. Oh my God, I got to get access. Oh, I could use my retirement dollars. That's where, this comes in. And I'm looking at these individuals. I'm like, whoa, take a step back. I know you're ready to move forward. Slow it down a second. You're talking about investing 100, 50, 100, 200, $250,000. Especially I'm talking about retirement dollars, Chris, you know this better than most. These are the most precious dollars to you. This is what you've worked for, your nest egg. And I highly, highly, highly recommend that the first step is going to be establishing some sort of parameters when it comes to due diligence. Yeah. And I think that's what you're here to do today, right?
Right.
So talk about some of your.
Let's start at the top.
Yeah, please.
One, and I call it a series of non-negotiables. And the first non-negotiable is don't be looking at things you're not looking for. There are so many different investments out there. So if I'm looking at venture or I'm looking at real estate or I want private debt, focus on that aspect of what you want for your portfolio. It is very easily easy to become distracted. There are so many different, shiny baubles out there and a ton of different investments. So don't be distracted, or otherwise you're going to end up trying to boil the ocean. You're going to go in a bunch of different directions. You're going to get super confused of what you were looking at and what you cared about and what information you've actually collected and what information you think you collected, but you haven't, because you got confused. So that's the very first step. If you want real estate, maybe you're going to do an equity real estate deal. Listen, I want to dive into this. And that's what I want. Focus on that. It doesn't mean like, I wish I could share my LinkedIn. The amount of things that come through on my LinkedIn of one venture deal or real estate deal or oil gas. I mean, I am just shotgunned continuously with deals, and I'm very nice to them. I say, that's great. I love to connect at a later time. That's not what I'm focused on currently. Get to that no quickly. It's a lot of people think saying no is a bad thing. It's like, no, for the manager, you're saving yourself time. You're saving them time. It doesn't mean you won't want to see that later on. Or, hey, send over your marketing material, create a file, tuck it away, come back to it later when that's something that's interesting in your portfolio. So that's the first step. Stay focused. Second step of the non-negotiables is really, identify what is an absolute no for you. So I'll give you one of my very top level filters for me personally. And I think if a lot of people had carried this one through 23 and 24, they would have avoided a lot of problems that some people are still suffering. Listen, if they don't have any third-party oversight, like a fund administrator or some type of audit parameter operationally and financially, just don't invest. I'm sorry. Just don't.
Stop. Yeah, stop right there.
It's just, you're going to maybe miss out. And I'm not saying there's not some really great investors out there that aren't having oversight, but it's an opportunity loss. There's 1,000 things for you to invest in out there. You only are finding one or two. So if you say no to one because they didn't have that high level filter of yours, and it turned out to be a great investment. Okay, you know what? You can circle back around to that once you have that clarity and seen them come to some kind of finality, or they went through a cycle. And this is important also, where for about 10 years, you had a lot of people in real estate that never saw a cycle. They never had any difficulties, and everything was up. All boats were rising. The tide only went somehow one direction. And what happened as soon as also when the tide shifted, there's a famous quote, you'll see who's wearing clothes or not, but from Mr. Buffett. But you're gonna find those people that didn't know how to, say, manage a property. They knew how to run a financial engineering trade where, hey, I get the deal, I get a bank to finance it, I'm in for 3 years, and then I refinance it, boom, I'm out. And everyone's happy. That was a great trade for many, many years until it wasn't. Then you found a bunch of people who I kind of call, they're not frauds. It's we talked about this last time in a webinar where they're imitators. They're not frauds. They're imitators. They're not the experts. They're not the one that actually understands and can dynamically move with the difficulties of various markets. And there's a paper out that, and you can go watch the old IRA webinar on imitators. I think that's a great way to look at the world. I think most people think due diligence is there to find frauds. For every fraud you run into, there's 1,000 people trying to do the right thing. Having found actual frauds and worked with people who found frauds, it's very rare.
Chris, I just want to chime into this. When we're talking, you and I understand we're talking, yes, we are talking about due diligence and performing due diligence, but a lot of, IRA Club deals with over 1,000 sponsors, fund managers, none of these individuals are intentionally going in here thinking, how do I screw somebody over? That's not their mindset. It's just, they didn't prepare themselves is what we're talking about when we say imitators.
And that not being prepared or not having the right experience when the market shifts. There's a joke amongst the guys that have been around for too long is, someone walks in and says, I've been doing this for 10 years. And your comment back to him is, oh, so you don't know much. 10 years is a long time to be doing something, but for the last 10 years on a lot of different fronts, you may not know as much as you needed to know because you had a pretty easy market.
But Chris, to your point, this last 2 years, 2023, 2024, everything that you just talked about, economic cycles and COVID and what, somebody took a 5-year arm, 7, and when it came due, we saw a lot of companies kind of go belly up. Not intentional. It's because they did not anticipate. They did not prepare for that specific issue. But so Chris, what's another like 100% non-negotiable for you?
One of the I mean, it comes around transparency. If you got to be able to walk me through the trade. I need to be able to see the portfolio, because here's the one thing with due diligence, and this is super important. And I always see this. People are like, I do good due diligence. Yeah, you know what? You come in like a freight train on the first round, where you really have the right questions. You've developed your non-negotiables. You've collected the information. You've really torn them apart, and then you kind of go into this like, I'm now passive. I've proven this person's real, and now I'm not paying attention. That is a really big problem. You need to have an ongoing monitoring aspect, and the ongoing monitoring needs to be decided how that's going to look and what that's going to be up front. You need to understand not just, I send out a monthly newsletter. That's great. I'm talking about, like with my fund. Oh, you want to see the loan tape, every single loan in my portfolio? Great. Here it is. I mean, there it is. There's the address. You can go look up, public codes. I always believe in, upfront verification and references is always great. But you know what? Every once in a while, you're in something for a year or two, run through it again. I know it's a lot. It's a lot of work. But the thing is you're deploying a lot of money. So develop this process and procedure of, hey, I know I'm going to really hit these guys really hard up front. I'm going to really, run them through the machine. And you know what? In another couple of years, I'm going to do it again, just to see if everything's the same. Because here's the one thing that actually happens that most people don't really see. The investment sometimes doesn't change. We'll talk about that because there's something around style drift as well. But the investment may not change, but so you've added people. There are people doing different deals. The guys that were running the things who have the expertise, are they still running the same level? I mean, you get these companies that grow, and sometimes they grow in not a positive way. So the eyeballs and the expertise that was maybe running this trade 2 years ago is maybe they're not running the trade this year. And those are the things you need to be able to obtain. So transparency, not from you send me a newsletter and you got a quarterly webinar. What else is available for me to really walk through and see the trade? There was the latest deal that was out there, and I was just talking to an investor who unfortunately is in my fund, but he's also in the Paramount, the ATM fund, the Paramount Investment Group. So that's a tough one. That's a really tough one. But if you developed an upfront process to where, hey, I'm going to need to see the, bill of lading for every ATM that you're purchasing, and I need to know the address that you're putting them in. I mean, each one of those is a trade. I don't care if there's 1,000 of them. I mean, that's what I need to be able to see. Now, you don't need to go see every 1,000, but it's like, hey, can I spot check a few? Can I go and see it's functioning? Can I see if it's there? Is it well maintained? And what turns out, if you guys don't know the story, is, well, he was meeting the lines of his legal docs and say, hey, I'm buying ATMs, but a lot of them were just showing up in a warehouse, and he wasn't actually releasing them.
Chris, I want to ask you, so checklist is a really big deal for you, which, and I love that you said, for example, if they don't show you what it is that you're asking for, huge red flag, step away, don't do it. Yeah. I know you're such a mad scientist, and there's so many levels and layers to due diligence. And I could sit here obviously for hours and talking and breaking it down. And we're trying to K through 8 this for a lot of first timers listening to this. But you actually have like sections of due diligence. You kind of break it up into like 4 increments, right? Which is like investment due diligence, operational due diligence, business due diligence, economic due diligence. Yep. Why don't you talk about that a little bit? I mean, breaking those down.
Yeah. Those are the 4 buckets that there used to only be 2. The other 2 have been added over the years. If you go back to 2009, when a lot of people were all about operational due diligence, the big bucket was investment due diligence and operational. It has become more complex now. Investment due diligence is where most people spend most of their time. It's the fascinating part, learning the investment, what's the opportunity, and then assessing risks. Operational due diligence is where people start to usually fall down because this gets into the process and procedure that, operational due diligence applies to all process and procedure that relates to the trade. So how do they originate a trade? How do they analyze the trade? What's their estimates? How do they maintain that trade on their book? And how do they exit? What's that entire process and procedure? And then all the support, mid, back, analysts, teams that support that trade. That's understanding, is it, and why you're doing operational due diligence. Everyone's asked, well, why do I really care? One, that's actually where most funds fail. It's usually not a trade problem. Most funds fail at the operational level. You need to understand that process and procedure. How much time and effort does the manager put into process and procedure? Do they understand what risks they're taking operationally and how are they mitigating that? The next level is business assessment, business due diligence. Now, business due diligence goes into all of the operational aspects that don't have to do with the trade. So you're talking about office, equipment, communications, technology, cybersecurity, a variety of different things. When I was doing due diligence, cybersecurity wasn't a thing. I mean, you talk to IT to make sure they had the right trading platform and that they had a dedicated, line so that they didn't go down during the middle of a trading day if they were, something like some level of, they required that constant feed during, trading day, trading hours. But now IT and risk and cybersecurity is a whole nother level that now falls under this, this business, business operations due diligence.
Talking about cybersecurity and whatnot, I think I told you the story once before. There was a individual, Charlie C. Not gonna give out the name. Used to speak at multiple events, just to talk about cybersecurity and fraudsters. There was somebody that actually was literally watching Charlie's speeches, presentations, copying his PowerPoints, copying his subscription agreement and PPMs. This is what it's come to, right? You have to be able to see that firsthand, the due diligence process, looking things up on the SEC website, articles. Yep. Those are the things what we're talking about doing. The EGDR SEC website, making sure things are filed. And Chris, I didn't mean to cut you off, but I just wanted to bring that to somebody's attention because unfortunately he's not an imposter. Charlie C is not an imposter, but other people are trying to grab that information from somebody else to potentially steal money from wherever. I think,
I'll give you a perfect example that literally just happened last week. I'm an expert contributor for a crypto platform that a number of guys are building out of Canada. And
what's the name of it?
Ciphex, CIPHEX. Within a week of them launching their website and everything else, there's an entire website
duplicated.
It is duplicating them.
That's exactly what
happened. Stealing their logos. Yes. I mean, it is not them. And the thing is it functions. You can click on it. You can go in and you can add wallets. You can do everything that you would normally do. Here's the thing. If you do that and you move crypto, you're never getting it back.
You're never getting, yeah.
It's not
especially within your retirement account. On top of that, you're definitely not getting it back. It's not FDIC insured. Chris, Chris is exactly what happened to Charlie. They duplicated his website. Everything looked, talked, and spoke like him. I've never seen anything like this. This is an example of business due diligence, the cyber side of it. Just this is how crazy.
And I know it's daunting as an investor that, hey, I'm a doctor all day. How do I keep up with all this?
Yeah.
And I get it, but it's really, you gotta pay attention. You gotta be careful. I've run into things where I've seen graphic designers recreate bank accounts.
Wow.
I mean, where they send out a statement that looks exactly like a bank statement. And so the thing is that's where you got to get into, and it will kind of spin back a little bit. One of my non-negotiables also is if they don't have a process and procedure for you to verify things, that's a no-go.
That's
like, I mean, like, great, you have this bank account. That's super. You sent this to me. Wonderful. Who can I call and verify there? And I need you to send an email because, you know, a lot of these people won't talk to you. So you like want to get a hold of a bank or you want to get a hold of an accountant or a fund admin. They won't talk to you because they can't without the client's authorization. So you got to understand that process. You got to take that step. And the manager should have no problem sending out an email, CCing everybody on it and saying, hey, this guy's going to call you. He's totally authorized to ask questions about us.
Chris, that's actually something that we've added not too long ago, about 2-3 years ago, where we actually ask for a verbal. So before you invested, identified the investment, you've done your due diligence, our investments team will literally call an IRA Club client before the funds move out to wherever, we ask, we verify how much is going out. This is your name, your IRA account number, your last 4 digits of your Social Security, we verify everything before it's sent out. And as much as it may waste a day of your time, who cares?
Well, and there's also a number of things where I know a lot of my clients that have been with me for years, they're annoyed because I'm so repetitive of, hey, here's an email with a second verification of wire details. The other wire details are on your subdoc. And, if you need to, give me a call. I think that's wise to do. And they're like, no, I'm good. And I'm like, okay, I'm just letting you know. We're still at Salal because we actually had an event where someone got a client's email and sent them an email saying that our bank details had changed. Now, luckily, this client is in the investment world and he's known me for years. He called me and he's like, hey, Chris, did you change your bank? And I'm like, no. And I'm like, no, we're still over here. And he's like, okay, I'm just letting you know, I got an email that says you changed your bank. I said, okay, send that over. Let me know. I can get that on, a phishing report and, we can try to, stop those people. And it did. I mean, as soon as we kind of reported it, it just kind of disappeared, never happened again. But don't kid yourself. I mean, I don't know how many people that are listening to this own their own businesses. We get phishing emails daily.
So do we.
I mean, it is a constant barrage. Like these guys never run out of ammo.
And Chris, just to not scare anybody away, the IRA Club here, we probably attempted hacks in the 30 days per month is over like 4,000 or 5,000 attempted hacks. It's crazy. Now, as a bank, we need, to have certain parameters. And one of the things that we say to our clients is we apply a two-step authentic. Sorry.
Yeah. F2, 2FA. Yeah.
Thank you.
Two-factor authentication.
And that should be also for the investment company that you're jumping into. Those little tiny things will go such a long way. And let's talk about the last due diligence. Right?
Last one.
Economic.
This one gets a little bit more difficult because you got to really understand the first one to do the fourth one. If you don't understand the investment and you haven't taken the time to really you understand what they're doing, what risks are they taking to get a return, and this is why I'm talking about this is one of my other non-negotiables. If I ask you what your trade is and you can't explain it to me to the level I can understand it, great, move on. Because I'm telling you, things that are super, super complicated have a lot of ways to break. It doesn't mean they don't work. They just have a lot of ways to break. And sometimes you can't see what's actually going to break in this massively complex machine. So that's one thing also that I sort of say, it's like, and I've been around for a while and I have been at a table where someone explained to me what they're doing. And I go, I'm not a dumb person and I have no idea what you just said. and I'm like, I'm going to have to come back to this. And we didn't end up investing because not only myself, but like 2 other people couldn't get their hands around the trade. But so understanding that trade leads to the 4th section, which is economic due diligence. You got to understand what are the cycles and the events and things that could be occurring on a global macro, which means outside of the fund, things that could be happening in another country, things that like right now we're dealing with a lot of changing administration uncertainties, like, hey, what's going to happen? It's going to be interesting no matter what. But then you can go in and say, well, wait, is this, I don't believe in trying to time things, but I do believe in trying to size your portfolio correctly and understand the risks you're taking. And so it's like, well, hey, I love this idea. I think this trade's going to be great. But, I was looking to deploy 500,000, but in this time I'm only going to deploy 100,000, put my toe in the water, really get a feel of the trades live in my portfolio. I'm no longer ivory powering this. There is another psychological aspect of sitting around and watching is what I call ivory towering. You're not really paying attention because you don't have anything to lose. As soon as you have something to lose, you pay far more attention, or at least you should. And so that last piece is understanding different things that are going on in regulatory base, economics, what's happening on a macro basis that could affect this trade, and understanding and take that question back to the manager and say, hey, walk me through the cycles that don't work for your trade. When was the last time you really had trouble? And what did that trouble look like and what caused that? If they haven't ever had any trouble, that might be true, but it's usually not. I mean, if anyone's been doing anything for a number of years, you've probably run into something that didn't work out and it was caused by an external factor. You need to vet that out, and you need to understand, hey, if that's going to happen again, how you can ask the manager, what have you changed to mitigate that risk? And if they haven't done anything and, hey, we're just going to ride through that and that's the way it goes. Well, okay, you could, lighten your exposure if that's what you want to do from a portfolio standpoint. So that's that last bucket, but it's kind of a trick. You can't do the last one without understanding the first one.
The first three. So, you and I, as I mentioned earlier, we travel all over the country, right? We see all different types of investment opportunities that are out there. And, one of the things you said to me a long time ago, believe it or not, you're like leveraging the network, the people that you're out talking to each other is such a huge factor. Can you elaborate a little bit more on that? Like, what did you mean?
Well, I'll give you a real world example of a professional shop. We had 9 people, all professionals, analyzing a bunch of different funds. That was our immediate network. It was like, hey, I'm not really understanding this. Can you take a look at this? And I can go to other people who have different experiences, different backgrounds. They have, maybe they did different trades at another job. And so that's your immediate network. Then it's an extended network of, well, who else do we know maybe does this trade? So we would do this all the time. We'd run into somebody doing a particular trade, and maybe we had another fund that was doing that similar trade. We would leave names out of it and say, hey, if I give you this trade example, can you walk me through? And like, it's not exactly what you do, but it's pretty close. Can you help me out? And that's what it's very important. If this is not what you do for a profession, yet you're going to be writing checks and investing, you need to surround yourself with like investors and people who can be your extended resources, because you can't know everything. It's just not possible. There's too many things going on. In the world of alternative investments, the joke is it's easier to tell you what it's not than what it is. What alternative investments is not traditional stocks and bonds. Holy cow, that's a really big universe for you to try to consume if it's not your day-to-day job. So if you're going to then, hey, let's go back to the top, focus on what you're going to do. Don't try to know everything. But then you've got to go out and find investment clubs, other investors, other people who've been doing it for a number of years, and you can rely on them to show a deal or look at a deal. And also, listen, you just can't be bothered. I'm a big martial artist, and it was really funny. We used to have a box, and it said ego at the front of the door. When you walk in that door, leave that ego in the box, because you're literally probably going to get punched if you don't. But the thing is what I'm getting at for you is like, listen, it's okay being the dumbest guy in the room. Ask the dumb questions, because you know what? After a couple of years, you're not going to be the dumbest guy in the room.
Yes. No question is stupid. Just in our world, no question is stupid. And I just want to jump in and say, remember the saying, Chris, growing up, tell me who your friends and I'll tell you who you are. Same concept in this world, right? Yep. Tell me your friends. I'll show you who you are. Jumping in, networking with, for example, this event that I was just at previously in New York City, C-suites, all like-minded people, all looking for, and no egos. I love that you said that, no egos. Everybody walks in even keel and just asking questions to better themselves. So it's the same concept to your point, right, Chris?
Yep. Yeah. It's very, very important. For almost every investor, you got to build a network, and you got to rely on it. This is not a one-man game. I mean, you can try to do it if that's what you do for a living. But even for me, I look at a bunch of, one day I'm looking at a venture fund. The next day I'm looking at some kind of hedge strategy. Then I'm looking at a real estate equity deal. And then I'm in private debt. So someone's showing me something different in private debt, because like clockwork, someone will come in and say, hey, I was looking at this private debt fund. I'm like, Sure, I'll take a look at it. I mean, but I can't know everything. So when I run into something, I don't have the right question and I want to get the answer to my investor ask me, they're relying on me as part of their network. I have to go to my network and go, hey, I've never seen this before. Have you guys seen this before?
Yeah. Well, let me ask you. So let's just say hypothetical scenario. Ramesh Fakori, I've identified the investment opportunity. If there was somebody first time listening, let's just go real high level. What would you do? 1, 2, 3.
1, 2, 3.
Maybe even 4. Go ahead.
I'm assuming I have my non-negotiables set.
Yep.
You got to read your docs. Phase 1.
Docs.
Get in,
number 1.
understand the marketing deck, the PPM, the OA. Develop your questions. If you read something you don't have the answer, that's a question.
Good.
And you need to take that to the manager. That's step 1. You got to understand your docs. Set up that meeting and have your questions ready to go. I mean, don't be a box checker off your checklist, like, oh, answer check. I've had people do due diligence on me when even I was working at a large allocator, and it was kind of a joke. I was like, hey, do you want me to take you out of the conference room and show you the trade? And they're like, no, I'm good. And they would just check a box. Checklists are great to keep you organized so you don't miss something. Yep. It is not a blind list of where someone gave you some rando answer and you just, I'm done. Good. The check. And so have your checklist, get through all your questions. There's no hurry to make an investment. This is not some show you're watching at 2 a.m. where you can get, you buy now, you get you get one free in a Cuisinart. No, listen, take your time. Do not be in a hurry. So docs, get your questions answered. Then you've got to go in and those things that are verifiable, verify them. I'm going to give most people a hint. You probably haven't seen this document because it's not terribly common. It's a very institutional document. You can Google it. It's out there. It's called a due diligence questionnaire, a DDQ. In the big world, you don't even have one. No institution's even going to look at you. A DDQ is a document. Ask your manager, do you have one? It is a complete operational overview of the entire manager and how they integrate with the fund, even going through every service provider. And in our DDQ, which I created, is like, okay, not only do I list out my service providers, I list my lead contact, their email and their phone number. And I tell you in the document, yes, you can reach out to them, but let me know you want to. I'll set up an email letting them know it's okay for them to talk to you. Go through that verification process. If you haven't come to a no or a yes in those 3 steps, then you got to go back and start over again because you don't have the right you don't have the right non-negotiables and the right checklist.
Now,
you want to get to your no as fast as possible.
As fast as possible. Chris, listen, I meet so many individuals at events, clients, the current IRA Club clients. They say, Ramesh, I've done my due diligence. I've checked off the boxes. I've done everything, and I'm just still on the fences. Okay. What would your answer be to somebody that just everything looks right on paper? Why am I not dipping my toes? What would be the answer to that?
Don't invest. You need to spend more time and watch that manager and see what they're doing.
Yeah.
If you're uncomfortable about something, last story. This is probably my big failure. It's the only one that I probably did more due diligence on this trade than I've ever done on any trade ever in the world. And if anyone wants to talk about it in nauseating detail, sure. Because not just me, 9 other people that I all think they're much smarter than me, got caught where we identified what we thought was the problem and we were kind of uncomfortable. Like not 1 star, not 10 stars, but like 20 stars, everything aligned except one thing. We couldn't get a hold of one person who was doing something related to the trade. We asked repeatedly and we were kind of pushed off, but everything else was perfect. It was a fraud.
Wow.
The guy running this had accountants. He had bankers. He had a lot of people that he had sort of twisted into this fraud. And so it was unbelievable, the universe he had built around him. And this guy was a professional investor. He knew what you were going to ask. He knew what answer he had to give you. to get you to check that box. And the thing is we ran into the one thing we couldn't get, and we were like you're saying, your client is like, I'm still uncertain.
I'm uncertain.
Don't do it. Continue to watch and get that answer, or you know what? Move on to another trade.
You know, Chris, I love that you said all that stuff. Sometimes I say to investors, if something's rubbing you off the wrong way, listen to that internal clock. Listen to your heart. Trust me, it sometimes goes a long way.
Yep.
If you just say no, there are going to be other deals out there. We promise you that. They're all over the place.
Always.
You know, they're always, I see them left at every event. There's 60, 70, 80 different events that are out there. As long as you take the time to break it all down, have your checklist. Chris just said it. There's one thing that was rubbing them off the wrong way. They wouldn't respond. That's all it takes. So because of that, look, hundreds, if not thousands of dollars were saved, you know, on his side, if not millions. So, you know, Chris, if somebody wants to just reach out to you, connect, learn more, how can they reach out to you? What would you say?
Yeah, the two easiest ways is you can definitely find me on LinkedIn, identify, oh, hey, I was watching your podcast. If you come in blind, like I just like to connect, I always look like about what. But find me on LinkedIn. You know, I'm easy to find. There's only a couple Chris Carsleys, as I tell people. There's one who's a professional soccer player in Australia. He's cooler than me. If you can connect with him, that's great. But for me, I'm the one with all the letters after my name. I got the gray hair. He doesn't. You can find me there. But also you can go to kirklandcapitalgroup.com. You can kind of learn a little bit about myself, about Brock, you know, what we're doing. And yeah, if you've got questions on due diligence, you got questions on private debt or hedge funds or venture, I've done a little bit of everything. And, you know, one of the ways that I'm constantly, you know, giving back is, you know, the best weapon I can hand people is education. It's the best weapon I can hand you.
Why we get along, you and I. We're both educators at the end of the day. I love that about you. I always say, you know, when you're talking to Chris, he never talks about any of his funds, his deals. It's how can I help you? And one of the things I always say is that's the kind of person that you want to be around. Your networking group, right, is Chris. And again, for, you know, even IRA Club clients that listen, we always say, and I know this is our podcast, feel free to go to Investors Row, all right, iraclub.com. You could check out Investors Row. Kirkland Capital Group is on there. He updates his daily PPMs. You know, his, we don't like to say pitch decks, but your educational decks. Go through them, look at them. We do webinars constantly, me and Chris. Advanced strategies of due diligence. I know this is very basic to maybe some people that are listening, but you could get very analytical. Before this podcast, Chris said something to me where I was just like, what did you just say? Went right over my head. But Chris, any final thoughts?
We'll leave the quantitative mathematics to another.
Yes, please. I had no idea what you said. We'll have that at another webinar. But any final thoughts for our listeners or comments?
Be patient. If you lose money, you have to double your money just to break even. Don't do that. It's all about taking your time and making things happen.
Taking educated, calculated risks always.
There's always risks. Like, listen, you can do your due diligence, and it doesn't mean the investment's going to always go up. That's the one thing also. And I know that's troubling to a lot of people, is like, wow, I spent so much work on this and, you know, the investment didn't work out. Well, it happens. That's just kind of the nature of investing. You are taking a risk to earn a return, but be patient.
Yeah. And that also constitutes to the stock market, right? So, you know, doesn't matter what the investment is. So always understand, you know, even if the market's up, a lot of you have your IRAs and 401ks. In the traditional sense of stocks, bonds, mutual funds, and ETFs, well, guess what? A lot of people remember the 2022 where they lost about 20%. That is risk. That is something that you lost. Now you got to double down just to get back to that break-even point, and that traditionally took about 2 years. So with that being said, Chris, I just want to thank you for joining us. It's always a pleasure having you. Good sir, good friend of mine. Until next time, thank you.
Thank you very much.